This is Prince Dykes. This is the Royal Financial Investment Group. Doing a quick video today on how or when to sell stock, right? I got a question down in my comment box that said, hey, when do you sell stock? How do you sell stock? But real quick, if you want to get in contact with me, the best way for you to get in contact with me is to drop a comment below the video, or just inbox me here, or email me at prince@royalfinancials.com or royalfinancials2013@gmail.com, however you want to do it. But the quickest and best way to get in contact with me is by dropping you a comment right here. So I'm getting to the video, make it real quick and simple and easy. So people say, hey, I have a stock, when do I sell a stock, right? Well, nobody knows when to exactly sell the stock, because if you know exactly when to sell the stock, then, you know, we'll all be billionaires, right? But no, we're not. So everybody's making a prediction or essentially a guess, or they use technical analysis, or they have their own, you know, formulas or way to figure out when to sell a stock. But there are other ways to tell you when to sell a stock. I'm gonna go through a few right here, right? So first, on this little handy dandy drawing here, if you can see that a little bit, here you see the little U, right? You see how when the market the stock goes up, then it goes down, then it goes up. That's how it goes, right? So when you initially buy a stock, you're here. You know, you see the stock go up, you become all excited. You see the stock go up and it's going up, and you're like, oh, I'm so excited. I made the best decision in my life. We're going through the emotional piece of investors. When they buy something, they see it going up. Damn, I got it at the right time. It's doing great. It's doing excellent. It's going up, right? As you can see here. It's going up. It's going up. It's going up. It's great. And the next thing you know, it starts to fall off. And then you're kind of like, well, I don't know about this. Oh, crap. I should have got out. Oh, my goodness. Oh, this is horrible. Oh, this is bad. And oh, crap, I need to sell this. Now you're depressed because it's down here. And then you sell it. And then guess what? It goes back up, right? So essentially it does this, right? And it's the emotional piece that investors go through. When they first buy something, they see it going up. Man, I made a great idea. Man, this was the best move I ever made. Tell my friends to buy it. Tell my buddies to buy it. Tell everybody to buy it. Then it peaks out. Then it starts to slowly decline. You're like, oh man, I don't know. Maybe I should sell. Maybe I should get rid of it. Maybe I should, you know, crap. Let me get rid of it. It's horrible. Bad idea. I did bad or whatever. Man, I should have sold it earlier. But as you can see here, what I say is, as the stock goes up to its peak, if you can see that, it says sell. As the stock goes up, it gets to its peak, you sell. As the stock is declining, when it gets down here to the bottom, you buy. Then it goes back up. This is a natural cycle, right? So at the peak, you sell. At the bottom, you buy. This is called buy low. This is the low point. Buy low, sell high. Once again, you sit at the bottom, you buy low, sell high. So the stock is going up. When it gets to its peak, this is when you sell. When it gets to the bottom, this is when you buy. But it's a hard concept to understand because of the emotional piece. When you see something declining and declining, and it's bad news and it's bad press, everybody's selling it. JCPenney is horrible. Oh, this company is horrible. Oh, it's bad. It's getting bad press. It's done something wrong. It has all type of lawsuits. It's kind of hard for a lot of investors to be like, hey, that's going to be a great buy. So it's a whole lot easier to sit here and say, hey, at the bottom you buy, then you hold. But when you're looking at it decline, it's hard to make a bullish position on a bearish stock. So that is the emotional piece. So now let me go a step further and introduce you to the business cycle, right? You may say, hey, what is the business cycle? This is a business cycle. It looks just like the emotional graph I drew earlier. So boom, boom. Just like earlier, right? Boom, you see that? All right, you see how you start down here, then you go up, and then you cut back down, then you go down, then you go back up. So when an economy is expanding, this is the expansion, right? We're going to show it to you. This is considered, you know, the economy is doing bad. It goes up. It goes into what we call a expansion, right? Hopefully that glare is not too bad. But it goes up into what we call an expansion. Then when it gets to the top, up here, when you get to the top, that's called the peak. And then what's right after the peak? This is called a contraction. this area to this area is called a contraction. Recession. Remember when we was going through recession 2007? And a recession is the definition of a recession is when you have 2 quarters of a declining GDP, which is a gross domestic product. All the things that we produce and sell and stuff like that within the borders of the United States. So after you have a recession or a contraction, the economy starts to decline. Then it gets to the bottom. This bottom area here, when you get down to the bottom, this is called the trough, right? Then after the trough, guess what? We go back into an expansion, just like we saw over here. So from this point to this point, as the economy is doing good, it's going great, boom, you have an expansion. Then guess what? You're going to get to a peak, and after that peak, you're going to have a slower contraction. That's the business cycle, that it goes up and down. The market rarely moves sideways, which is called contraction. A stock can only do 3 things, which is go up, go down, or go sideways. Going up is considered bullish. Going down is considered bearish. Going sideways is considered being a sideways or contraction. Not a contraction. I'm using the wrong word. I can't even think of it. Consolidation. I'm sorry about that. Not a contraction. Contraction is what I just told you about a recession. Consolidation is when it's moving sideways. So right now, what do we consider the economy to be in right now? An expansion. You look on the news. Stock market is trading at the highest it's ever been. The Dow Jones crosses the 18,000 mark. Everything's doing great. Gas prices are dropping. All these other great things you hear in the economy, which leads unemployment is low. GDP is going up. Things like that. Gas prices are low. When you see that, people think we're right here, what we call an expansion, right? And what's next after the expansion? It's called a peak. What's after that peak? It's going to slowly curve down. It's going to trough. So just like I said earlier, when do we want to sell? We sell at the peak, right? Then guess when we buy? We buy in the trough, right? And after the trough, then we come into what we call an expansion. And those are the things that you use. So that is the way, using those 2 things, I hope that brought value to you, to tell you when to sell a stock. I have a video. I don't think I have a video, but I will make a video. I'm telling you, if you own a stock in E-Trade, how to sell it, which is pretty easy. But I always make a step-by-step video like I always do. Simple and easy, quick video to tell you how to sell it. So remember that is you buy low when it's doing bad and you sell high. Now there's different things when it's called there's things called systematic risk. You cannot avoid systematic risk. For example, the market just doesn't do this. It just doesn't move sideways. It just doesn't go up. No, it doesn't do that. It just doesn't go down. Down. It has periods when it goes up. It has periods when it moves sideways. And it has periods when it's going down. So the market constantly does this, right? And you want to buy in those down periods, right? So sometimes the market is what we call, when we're going up, it's called bearish. Not bearish, but bullish. When it's going up, we call it bullish. When it's going down, bearish. And when moving sideways, it's called what? Consolidation, right? So that's pretty much what's happening with the market, right? So if you buy a stock, using those things is good tools to have. I hope that helps you out. I don't want to get too in deep with going with calls and puts, but if you want to know that, just let me know and I can tell you how you can make money in a bearish, bullish, or consolidating market. So thank you for asking that question. I wanted to ask that question. This is the part of the video, which is towards the end of the video, where all my real fans are. So if you're one of my real fans, leave me a comment. Give me a thumbs down. Say, hey, Prentice, you're doing a great job. Or tell me, hey, you suck. You need to get better. Thank you. Keep leaving those comments and keep telling me what I need to do to get better. Just like one of the things say, hey, your music is a little too loud. Thank you. I'm going to fix that. I don't know if I'm doing something wrong unless you tell me. So thank you guys for always supporting me. Don't forget to hit that like button, subscribe button, comment button, share button. Tell a friend, tell the word, share it to everybody. Thank you. Be safe. I'm out.